All right, guys, welcome back to the channel. Looking at the midterm years for Bitcoin and the S&P 500 today, along with our regular update on the channel. Things are progressing as expected. So congrats to everyone following along on the channel, members, the Investor Accelerator crew, the YouTube crew. Things have basically just been tracking as, I guess, the cycles have suggested. That's looking at the S&P 500. Silver's taken off, and of course, Bitcoin as well, looking at the correction into this next move. I want to talk about this in more detail again today because there's still a little bit of confusion in terms of, I guess, what I think is happening over the next 6 to 12 months for what it's worth. So if you haven't already, hit the like, subscribe to the channel to have a macro cycle analysis, everything heading up into the peak of the 18-year cycle, still looking well and truly on track. And if you do have questions about that, I'm doing a 24-hour Q&A on Instagram. Just make sure you're following the real account. The link is in the video description, so just check the video and you'll find my Instagram over there. Heaps of accounts over there with more followers. They are not me. Just don't talk to those people and get scammed out there. As I said, Q&A, let's continue on. Okay, so yesterday we saw the Fed cut the interest rates, and in yesterday's video I did talk about the $40 billion that they're looking at printing for, well, basically in the next 24 hours to then go and buy treasury bills. And again, we heard the whole narrative, all the BS across X and YouTube and everyone talking about the money printers turning back on. This is not the same thing. Look at the 40 billion in treasury bills. It's essentially not the same thing. And I'm just going to leave it at that rather than continue to go round and round in the rants, because it's always going to stir other people up thinking that it's the same thing as before and it's going to be more and more, but it's not. Maybe they'll turn it back on in the future, but this is not the same thing. This one here is their RMP, Reserve Management Purchases. It's not QE dressed up as something different. As I said, I'm not going to continue on with the rant. It's just mostly to understand that the narratives are getting way out of control in terms of what we're seeing online compared to what the announcement actually was. Now the S&P 500 continues higher. This is our look at the 5-year cycle that we'd copied, fractaled from 2020 after we saw this pretty significant dump back in Q1, Q2 of this year, of 2025. Now the reason we use that was because this event, the April tariff crash, was something that I guess was a massive shock to the markets in terms of the correction. Therefore, let's see if the market was going to respond similarly to what happened in 2020. Now, everything is, I guess you could say that things are different in terms of the money printing because there hasn't been any money printing. We've been in QT this entire time, and the S&P 500 has continued to go higher. So we don't necessarily need all of this money printing happening for the markets to go higher. It's just a nice to have narrative. Eventually it's going to be there, I think. I think it's going to come back again. But when it does and it doesn't work, that's what a news failure is. What I'm saying by it doesn't work is that if we hear about all this money printing coming and the markets really don't respond well, you start to see some days down from that point on the news. That is a very big warning sign. So keep that one locked up in your chest so that you don't get confused with what's going on X and social media with people talking about, oh, money printing's coming, we're going to go to the moon. Okay, so S&P 500 has continued to follow, for the better or the worse, the same sort of thing that happened 5 years ago after that significant dump with different conditions. So I'm not saying this time is different, the conditions are different, but the charts continue to replicate what people have done throughout history. That is the rhyming here. The exact repeat would have been exactly what happened in 2020. It doesn't happen in the markets. So in terms of Bitcoin into this midterm year, well, let's start where we are right now into that first move. The relief rally is still on track. We haven't seen anything drastic to the upside. We're watching our invalidation levels still around 108 to 116. 108 comes from the major support and resistance on the way down. There it is there. And then 116 is a big one that I'm watching because we saw a double top that then led to this collapse. That's this little minor double top up here, which turned out to be a pretty significant dump from that point. And then there was also some support back in July. So you can see this was consolidation, and then it crashed underneath, tested again, crashed underneath, came back up, resistance, and then we had that final move into 126. So 116, 108, big key levels there if this move is going to get any sort of balls to it for the bulls to get into new all-time high prices. Now, I think it's more going to be like a relief rally. We're trending into that relief rally for many reasons I've talked about over and over again. But barring all of that detail, that will take another half-hour video, and just believing what I have here, well, this is the continued path into this relief rally until proven otherwise. Now, of course, there's a few other indicators that people are watching. They got their 200-day moving average. That red line continues to fall. Now it's at 108,800. It's come down from about 110,000. So it's obviously going to continue to fall while the market remains underneath it. So the midterm years for the S&P 500 aren't that great, at least for the first nine and a half months. Then we can see on the right-hand side of the chart, basically off to the races. The black line at the top here is all other years. The blue line, average midterm election year. And Seth has gone through, put all of the data here. 1990, 94, 98, 2002, 2006, 2010, 14, 22, and 18. Not sure why the other way around, but nonetheless, the data is there. So this is a drawdown. This is not the year itself. Like, the year didn't start up here and then crash and end, for example, 25% down. A drawdown is just the difference from the high to the low within the time frame that you're watching. In this case, we are analyzing the year, so we're analyzing 12 months, and we're looking at the drawdowns, top, bottom, for those years. So 1990, 20%. We also know there was a recession that year, and it was the end of the real estate cycle. You had the peak, you had the correction, and 92, 93 was the start of the new real estate cycle. So you also had a major correction on the stock markets. 1994, you're on the way up. You're in that first half of the real estate cycle, the first 7 years, and that was basically off to the races. I think here we go, here's the chart. So 92, 93 was the bottom. The top there, 89, and then you had the recession, 1990, so on. Okay. So in that first half, you get a nice push higher, mid-cycle slowdown, and then you start to go again. So that's why, at least from what I can understand, you're not getting a huge correction in that 1994 year. This is all going to be important as we continue to progress to see how the midterm year plays out. 1998, big correction, or at least a big drawdown. It's starting to get a little shaky. It's starting to get towards the end of the first half. You can see the first half peaked in 2001. This is the US real estate and economic cycle. We know the dot-com bust or peak happened in 2000, and then the bust happened after that. And we have the data here. Okay, so 2002, huge correction, 34%. 2006, a minor correction, a minor drawdown for that year. You're getting into that peak, 2006, so you're running hot into the final legs of the top. 2010, you're at the bottoms again, bit of volatility, negative 16. 2014, you're on the way up again. 2014, okay, 2011, 2012, you're running up again. You have a smaller drawdown. Look at that, negative 7%. 2022 and 2018, you're getting towards that mid-cycle. So mid-cycle was around 2020. We peaked out about 2018, 2019 barely went higher, and then you had the correction for that first quarter of 2020. So around that period, there was some pretty significant drawdowns there. And now we find ourselves in, well, we're going to be in 2026 in about 3 weeks' time. So where is 2026 in this cycle? It's basically similar, not exactly, but similar to where 2006, 2007 was, and similar to where the 1980s, but where we were, say, for the first half of the cycle. You're just getting started in that cycle, so there's still a lot of energy in the markets. People are still believing there's a recession coming. There's a lot of fear, but the markets are showing the opposite. They're going up. They're heading higher. So 2014, near the beginning of a new cycle. 2006, you still got a bit of time left to get to the peak. 1994, you're at the beginning of a cycle as well. And when you look at these three together, you can see that the drawdowns weren't very severe. 9, 7, 7, not too bad, not even a double digit there, but you had double digits in all the other years. So the midterm year could be less severe than what the average midterm election year drawdown is. At least when I overlay the 18-year cycle to the midterm election year drawdowns. You can see the average is 17.5%, but I'm looking at these major ones here where you can still see the cycle is heading higher. Doesn't mean it's going to happen, of course, but they're the ones that I'm watching now. I think it's going to be less severe than a 2002. I think there's a good chance it's going to be less severe than 2022, and maybe we get the extremes here. You can see there's a 19, a 20, and a 20. So you got a three of them hitting that mark almost dead on around that 20%, and then we have three more in single digits. So we're watching for the midterm year on the S&P 500 to be a little bit choppier than I think some of the market is anticipating. And when we look at our 5-year cycle, which has been doing very, very well for many, many months, basically, almost exactly on point here, this 2026, although it's up, it's a bit of a grind higher. I think everyone would agree on that. It's not like a straight up. If I extend the chart, then that looks a little bit easier. But if you bring it all together, it's just not as clean as just basically running straight up. Look at 2024. We had many corrections through there. We had a significant April correction, an August correction, a higher low in September, an October into early November, and then we had another one here in early January. And so as we get into 2026, because we've already seen a nice move out, it might get a little bit choppy earlier on. And then, like the cycle suggests here, at least it's just looking at the midterm election, that quarter 4 might be a little bit cleaner, because what we saw this quarter 4 is not as clean. Everyone thinks that quarter 4 has to go one certain way. You got the Christmas rally, green quarter 4, off to the races. It's always going to be a nice, easy ride into the end of the year, but that has not been the case thus far. And we have about 3 weeks to go, but really only like 10 or 12 trading days left. And there's October 1st, comes in around 6,760 points. And currently the S&P 500 is at 6,906 points. That is only a 2% gain so far in this quarter. Sure, we could head a little bit higher, but yeah, at the moment, that's what we're looking at. Okay, so what does that look like for Bitcoin? Well, we've got our trusty predictive cycles out. 2014, 2018, 2022. Are they all the midterm years? 2014, 2022, 2018. Yes, they are. And this is the line. When you combine all of those years for Bitcoin, this is what that cycle line looks like. Now, you can see already the first half is pretty tricky. You've got a pretty big drawdown here. Don't worry about the percentage on the side. We're just looking at the pattern of the line in the dark blue here. The light blue is the current year, so we'll just move that out of the way so we're not too confused with it. And in terms of where this is going for 2026, there is a turning point. I'm not going to say that it has to be a low. Of course, the market is heading down through that period, but there seems to be a lot of confluence coming through for around that mid to late February for a turning point date. And then there's at least in this case, there's a rally into early March, and then basically back on the downtrend with some key turns along the way. You got a couple in April, more significant ones in May and June, another there in June, July, obviously every single month there. So it's going to depend on how we see the market head basically in the direction in terms of strength. Is it going to be a strong move into a significant turn, or is it just like another minor bump in the road where you can see the overall trend is still down? This is a downtrend, pretty big turn, bounce, and then it continues down from that point. That brings us back to the 2026 movement. You can see this run up at the end of the year. You got a September low here for the stock market. We've seen many lows around September, October for the for the S&P 500. So obviously US stock market. One in particular that I remember was back in 2022. Big lows here. You got a low in June. You got a low in September, and then just a brief touch in October before the thing started to take off. So if we're going to go through something similar next year for the midterm, then we could expect that things could be a little bit quiet through that period for reasons we've talked about before, and we'll continue to obviously update it here on the channel. And then that leads us into Q4, where at least for the stock market over average midterm election years, it suggests that it's got a stronger finish to the year after a lot of chop, volatility, just a fair bit of mess there, right? And so that brings a little bit of hopium to Bitcoin, I think, where if we can get through all of this period of the decline and then start to find a low here, maybe we start to see the market run up. Now, of course, as I said, there could just be a bit of hopium I'm trying to chuck into the video because very clearly the market says down. And we've seen many times before the Bitcoin has hit a low and then hit another low in November and then breakdowns into December. And then finally the market begins to turn around. So that's what I wanted to bring up when it came to the midterm so that we have a bit of a roadmap leading into 2026. Now, the chart that I had up here was just looking at a bit of a wavy line. And I think that that is possible to replicate or for the market to go across something similar to the midterm years like this if it's able to hold major support. And the major support is around that $70,000 level. That's the previous tops here. We're at 72. The 50% level is in fact 71,000. Let's move this out of the way. So you can see here, 71,000 right through the middle there when you round it up. And that is going to be where you need to see, or at least we need to see the major support for Bitcoin coming in over the next, let's say 10, 11 months as we lead into roughly October, because we had an October top. If we keep going with the cycles, roughly around that 12-month period. We know last cycle, roughly around 12 months to the low. Cycle before that, top to bottom, roughly 12 months. And then the 2013 top into the 2015 low was about 14 months. So this period here was 14 months, 30th of November to something like the 12th or so of January. Okay, so is this still possible with the US dollar and the recent strength? I think so. I think we're going to see the US dollar continue the decline here for the second half of the real estate cycle, which we are currently in. We know from our cycle analysis and from 50 plus years of history, you can choose to dispute it if you wish, but I know the main viewers here, they get the point that these cycles just, for whatever reason, they want to continue repeating. And we can see from the DXY over these last, as I said, 50 years, this second half of the real estate cycle, the US dollar typically goes down. And it's continued to get rejected here at 100. And at least in the very, very short term, we've begun to see the US dollar break some key levels here. Now, we saw the short term run up, so I think we can now say that's done. And longer term run down, breaking past 98 is an important level there for the bears, for the market to keep going. And then this low here at 95.8. So once it gets below 95, then we're probably in for another leg down. And in each of these occasions, the US dollar has broken down into new 3.5-year lows, consolidated for many, many months, and then gone on a charge. This time, let's see if it is able to do that, if it does consolidate, and if it does break down, because it put in this top already, lower highs, then that's going to be a very, very weak signal here for the US dollar, which could be some relief here for Bitcoin if and when the times line up for that magical time come 2026. The same thing is going to happen for the USDT dominance, where we've seen cycle after cycle, it's put in its low, it's told us in advance that, look, the market isn't liking this whole risk on game, and then you see this explosion in USDT dominance, essentially the safe haven for the crypto market. It's moved up. It's gone from 4% dominance to 6.5% dominance, now currently sitting at 6%. So this is not my opinion. It's just what's in the charts. If you don't like it, take it up with the charts. The same thing when you combine all the stable coins here, USDT and USDC, they're also in an uptrend. So basically getting ready for a raging bull market. Now, where do they stop? That's the next question. We'll find out in due course, but of course, we're going to be watching some of the resistance levels overhead. For now, we're watching roughly around that 11 and a bit, 11.2%, and then the tops here about 15%. This is the combination of the stable coins. Just looking at USDT, however, we can see we're hitting resistance around 6.5%, and then these next ones around 8.4, 8.8, 9.5%. There's a few of them as the market continues to head higher. Breaks through these highs, watch out. That's going to be a little bit of blood, maybe more than a little bit, a lot of blood in the streets. And we've seen this pattern over and over again with the cycles. Last cycle, it was almost identical. We get the pullback here. So that's a good point. Invalidation to this, breakdown of 5%. That's the first key level. Right underneath this yellow box, a breakdown. We can see last cycle, it came back to just underneath the 50% level and then took off again. So if that happens, we're watching for either a pump or a breakdown. That would be something different. And that's why we have to have an invalidation level. So if that is the case in terms of the test and then the move higher, and of course it's not going to happen like that. It might happen like last time where it took a little while and then took off. Then we're going to see more and more blood in the altcoin market. Check this one here. This one is excluding Bitcoin, ETHs, and stablecoins, and it's comparing Total 3 to Bitcoin. So there's a line under here at about 0.26. At the moment, the trend is very well down and continues to look very, very weak. You got this very minor rally, and it's continued to fall. So if that continues to break down, then you're just going to continue to see blood in altcoins. Remember, this chart is excluding Bitcoin, ETH, and stablecoins, but includes everything else. Breakdown of that level, you've pretty much got one left here at about 0.18, 0.17, and then you're looking for a breakdown into this zone. That's about 0.06 to 0.15. Very, very low numbers there. That's, if this breaks down, right, that's possibly where you could start to look for another low for altcoins before they may go on a bit of a charge. If that all starts to time up with the DXY coming to another low, if actually not the DXY, if that starts to line up with Bitcoin coming to a low and the S&P 500 sometime in 2026, like we looked at with these cycles through the mid-election year, I think that's when you could start to get a little bit more excited for your altcoins. All right. And looking at Bitcoin for this cycle, we're running into these highs. I don't think we're in some sort of extended cycle theory. That thing is broken. There's no such thing as an extended cycle. It's just a new cycle and the strength and the weakness of the new cycle. Extended cycle, throw it in the bin. It's just another hopium term. Something like that comes up every single flipping cycle. Last time we heard about extended cycles, the cycle before that, when I was here in 2017 and got caught up with it, was a super cycle. Remember, we heard about super cycle in 2021 and they tried to bring it back in 2024. Didn't happen, right? It didn't catch on. This time, the extended cycle, this 5-year cycle, seems to be the next latest and greatest thing. It's not a super cycle. It's not an extended cycle. It's just the new cycle, and wherever that happens to low, maybe here in October, and then take off, maybe it takes off to 300 grand. We just get this low coming in, and that happens into 2027, too far, 2027, and starts to decline from that point. That is the new 4-year cycle. And if that is the 4-year cycle, then you split it in half. Wherever that top happens, is it in the left side or the right side? That gives you the strength and weakness of that next 4-year cycle. If the top happens in the left side, they call it a left translated cycle, then it's going to be a much weaker cycle. For the next at least 2 years, because you can see if it's 4 years, split it in half, or half of it's got to be at least 2 years. It could be longer, could be 2.5 years. For that period of time, the market is most likely going to go lower. That is still a 4-year cycle. Don't worry about the halving BS. That's another, thing that Bitcoiners like to talk about. There is a halving event. Doesn't mean it has to be the halving cycle. So that's the 4-year cycle, looking at the lefts and the rights. So if Bitcoin continues on with the relief rally, gets rejected around that, 100, 103, 108, 116, and then starts to come back, then we could be in for this type of event here. This is the red line that I've got. I don't think it's going to happen exactly like that. It's just to give you an idea that we're going to see at least a basing happen, and then hopefully we get this big pump up in 2026, maybe into that early part of 2027, which would still fit in with the 18-year cycle. Remember, even though the US real estate and economic cycle tops sometime around 2026, it doesn't mean that the market collapses in 2026. Tops are a process. The tops take time, and then you get to the event. 2007 was the stock market peak. We had the US real estate peaking around 2005, 2006. We had the economy peaking around 2006, 2007. We had the stock market peak in 2007, but no one remembers those dates. They remember 2008. They remember October 2008, 10 months into October, nearly 2009. That's when they remember that event. Okay, so should something like that happen again, where we're starting to see tops for real estate in late 25, maybe into 2026, we then see the economy peak, some thinking like 2026, who knows, maybe into early 27, but let's just stick with this here, 25, 26, then the process is underway, and the event that shocks the market may not occur until 2027 or 2028, and that's what people will remember the whole event for, even though the whole topping process begins now and into the next 12 to 18 months. Remember, we're looking at some sort of low to build around this time here, 29 to 30. So keep that in mind. If you've got some questions, jump over to Instagram. I've got a Q&A going on for 24 hours. May do another quick one over the weekend, but anyway, link to that is in the video description. Make sure you're following my real account, Mr. Pizzino. All the other ones are fake accounts out there, even if they have more followers. And I'll see you guys back here at the next update, along with our beautiful look at silver, 64 US an ounce. Okay, I didn't go into that in this video, but I will in futures. Like and subscribe. Have a fantastic weekend. I'll see you guys real soon. Cheers.